Tesla's on the move. The stock is lower in the after hours. Phil LeBeau has been tracking the earnings. Got the details. Phil.
Hey, Melissa, one reason it's lower is because Tesla missed, I should say, when it came to earnings per share for the fourth quarter. Yes, it was a profit. They earned 80 cents a share, 21 cents shy of expectations. Revenue coming in, it's a little better than expected at $10.7 billion, but it's the numbers within the numbers that are getting a fair amount of attention right now. Free cash flow of $1.9 billion. And then you have gross margin of 19.2%. That is shy of what many analysts were expecting. And there's no explicit guidance on 2021 sales, not just production, but sales as well. The production will be about 1 million vehicles. But on the sales side, they delivered 500,000 vehicles last year. Today, they have yet to give exactly what they're expecting to deliver for 2021. The analysts are expecting 796,000. All they said in the earnings release is 50% annual growth over the next several years is what they are expecting. Do the math. That comes out to a little more than 750,000. But again, nothing explicit for 2021. The conference call is going to begin shortly. And what's going to be interesting is to see what they say about those delivery guidance numbers, if you will. Also, by the way, they have said that the Berlin and the Austin, Texas gigafactories, they're on track for first deliveries to begin a little bit later on this year. Melissa?
All right, Phil, thank you. Keep us posted. We will check in with Phil when the conference call gets underway. Again, that's in about an hour's time. Steve Grasso, what did you make of this quarter? Tesla does seem to be in the sweet spot right now in terms of the political environment for sure and investment trends in terms of ESG.
Totally in the target zone where it should be for a Biden administration. But as Phil said, the gross margins were considerably less than what the street was looking for. And I believe Elon was actually looking for 840,000 deliveries to 1 million this year, or in that vicinity. That was his exact terminology. Every time you bet against Tesla, you lose. You look at the chart. People have been taken out in body bags in this one. There used to be a liquidity problem, Melissa. There's no more liquidity problem for Tesla. So I still think you have to bet on it, but you have to trade this one. You can't just buy all in, but ultimately this one probably continues to move higher.
Yeah, the gross margins were lower, not just versus expectations, but also sequentially lower, which is not a good thing. Free cash flow, you mentioned free cash flow, $1.9 billion in the fourth quarter. That pillar of the bear thesis is obliterated, especially now, right, Guy, with the stock where it is.
Yeah, it's interesting. I think, it's funny that Phil looked at the same thing I was looking at. That gross margin number came in at 19.2%. I think expectations for about 23.5%. And you mentioned sequentially lower. I mean, that I think has got some people a wee bit concerned. But I'll say this, and I understand free cash flow, and I totally get it, but it was really never an earnings story on the way up. And it really shouldn't necessarily be one now. I mean, it should all come down to if you believe the vision or if you don't. So I'm sort of with Steve on this one. Every time the stock has been bet against, it's been the wrong way to do it. And I think this sell-off is probably going to be bought as well once the broader market tape settles down.
Energy generation and storage revenue is also an interesting line item. I saw that number and it sort of popped out at me in terms of the shareholder letter. Gene Munster tweeted this. The revenue is actually up 72% in the December quarter compared to 44% in June, 1% in March. That's becoming a bigger, still a small, but a bigger part of the business, certainly when it comes to actually just the growth percentage, Tim. That's sort of where you want to be positioned.
Yeah, well, I think this is one of those other dynamics that's been pushing the multiple higher for a couple of years, especially on storage. So, I mean, look, agree. Why should these numbers count against them now when actually the free cash flow and the balance sheet dynamics are not in question at all? I actually saw that they expect 2021 annual delivery growth of expect around 50%. That's what I saw on the tape just recently. So that's about as close as you get with hand grenades and horseshoes sometimes with this company. And even though they've been very specific in the past, I think that number's in line with expectations of where the analyst community is. So $860 billion market cap. Hard to worry about this balance sheet.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.